I'm Hazem Seeker. This is Counting the Cost on Al Jazeera, your weekly look at the world of business and economics. This week, currency wars. The intentional moves. Beijing devalues its currency as China's economy struggles, and the unintentional moves from the real to the ringgit. Countries feel the pain of the end of the commodities supercycle. Also this week, Nigeria takes on corruption, from the billions lost from the oil industry to the $150 billion stolen and stashed away overseas. Singapore celebrates 50 years of independence from a poor colonial backwater to one of the world's richest nations. What's behind its success? Hello, there's a phenomenon that has been playing out in currency markets over the past 18 months. The impact: emerging and developing nations have seen their currencies tank to multi-year lows. There's a good reason for this. The global economy is growing, but not as fast as many would like. And then there's China, where the economy is slowing and it's not buying in enough commodities. That's just one reason why it's devalued its currency. Generally, a weaker currency should be helping exporters. But with China not firing on all cylinders, there's very little hope for other nations. And the United States is moving towards raising interest rates, which makes the dollar a lot more attractive. From the ringgit to the real, rupiah to the rand, all are suffering as commodity prices slump on waning demand from China. So what does that mean for an economy like South Africa? So in 2014, the economy grew at its slowest pace since the financial crisis. This year, it's expected to rebound to register growth of 2%. The growth was undermined by lengthy strikes in the mining industry. While the mining sector contributes just 5% to the economy in real terms, it does provide more than 500,000 jobs, and each job supports up to 10 people. Altogether, that represents 18% of the economy. To counter the importance of mining, South Africa signed up to a historic trade agreement with 25 other African nations. From Cairo to Cape Town, the trading bloc is valued at $1.3 trillion. So you can see, as one of the strongest economies in Africa, there's a lot more potential. Well, let's put this in some kind of perspective now and look at the challenges facing South Africa with the co-CEO of Standard Bank, Tshabalala. Thank you for being with us. Now, let's start with currencies. You can't get away from it, but China devalued its currency. What does that mean for a nation like South Africa?
Like all other emerging market currencies, the South African rand has deteriorated as a consequence of the devaluation in China. And indeed, in the context of liquidity moving back to the United States, people purchasing financial instruments from the US, one can expect a material negative impact on the South African currency as a consequence.
Well, you, along with many developing nations, have seen currencies weaken. I assume this is really an opportunity for the nation to export its way out of economic weakness, perhaps.
Well, indeed, you know, a devaluation of the currency has got pluses and minuses. It's got a plus because it has got an upward drive to your revenues as well as to your costs, and as you correctly point out, it's good for your exporters.
So does China's devaluation then lead you to believe that other nations will follow suit, I mean, in what's been dubbed currency wars?
We are monitoring the developments. They form part of our risk management framework. We do stress testing, and we anticipate the various potential outcomes. We are concerned about potential currency wars. It is our earnest hope that that doesn't eventuate. And that there's going to be a flaw to these processes.
Well, just how important then is the whole mining sector to South Africa? Because while still among the world's biggest producers of coal and platinum, the mining sector does expect to firework as the commodity prices slump.
The mining sector is very important to the South African economy. However, I have to point out that the South African economy is diversifying, and it continues to diversify. The proportion of GDP contributed by mining is far less than it was even a decade ago, but it definitely contributes a large proportion of the country's foreign currency income. And so over time, one hopes that the economy will continue to diversify and that employment will grow in other sectors as a consequence of that continued diversification.
As a pan-sub-Saharan bank, how important is the tripartite free trade area to the bank and the economy? It's pretty impressive that such a deal could be done when there are many deals like the Trans-Pacific Trading Agreement, for example, that have fallen. Are Africa's nations better aligned to growth and development terms? It
is our view that increasing intra-Africa trade and investment is absolutely the way to go. So an Africa free trade zone is very, very important, and the movement, therefore, of capital, goods, and people, the easy movement of all of that is very important. For us, as a pan-African financial institution, we see upside in a more integrated African continent. And you just had your earnings release. Just give us an idea of how you did and what you expect going forward. Our headline earnings were up 27%, which was as a consequence of an increase in by 16% by our personal and business banking business, and a 54% increase by our corporate and investment banking business. So those were the positives. The negatives, of course, you and I were speaking about the impact of commodities. A whole slew of commodities prices declined. In particular, our West African region was materially negatively impacted by the decline in oil prices, as well as copper prices. So Zambian businesses had some severe difficulties. But notwithstanding that, the power of a portfolio, our East African business did reasonably well. Our South Central African business did very well, and our South African business did well, to give rise to that increase of 27%. Good to speak with you, Tshabalala, co-CEO of Standard Bank. And still ahead on Counting the Cost, Singapore celebrates 50 years of independence. But what will the next decade hold in store as low birth rates and a limit on foreign workers begins to bite? Well, Nigeria is one of the world's largest oil producers, but rampant corruption and mismanagement over the years has left many Nigerians wondering where most of the wealth has gone. The country's newly elected president certainly thinks so. He's promised to fight corruption. Muhammadu Buhari's pledge to investigate claims by the former head of the central bank that $20 billion worth of oil revenue went missing from the state oil company. A report by accountants PricewaterhouseCoopers said the national oil company should refund $4.3 billion to the government. But it's not just the oil industry that's plagued with corruption. On a recent visit to Washington, Buhari sought President Obama's help in finding and getting back the $150 billion stolen by corrupt former officials and held in foreign bank accounts. Buhari appointed a new head of Nigeria's intelligence service to fight corruption. Yvonne Dege met him and those directly affected.
Ishmael, who's a student from Ibadan in Oyo State, has felt the impact of government corruption.
I was asked to pay some certain money before I could get admission into the university, which it's very wrong. It's not the normal process.
Anti-corruption campaigners say Ishmael's experience is common.
One of Nigeria's main non-governmental anti-corruption organizations is the Civil Society Legislative Advocacy Center. It says more than $600 billion has been stolen or misappropriated by government officials since 1999.
Two prominent officials from the previous government have been detained and questioned about fraud allegations since President Buhari promised to end corruption if he was elected. The head of Nigeria's intelligence service is leading the new anti-corruption drive.
Whatever has come before us was facts and figures. It will be dealt with equally as required by the law. And of course, Nigerians should closely watch and follow what we have started and what we will continue to do. I'm sure they will not find us wanting.
Anti-corruption campaigners say apprehending former officials isn't going far enough.
We made it very clear to the president that he must not appoint anybody with corruption burden or with corruption pending cases. Anybody with corruption or any integrity deficit must not be part and parcel of this government if we are serious about fighting corruption and cleaning the system.
To end the corruption, it needs to start from the top, from the government top officials down to the top. Once they frown at this corruption, definitely every other people will also frown at it, and they will adapt to the changes for ending corruption.
Until then, many Nigerians, such as Ishmael, fear corruption will continue to deprive them of access to good education, healthcare, constant electricity, and other basic necessities.
Well, joining me now from Abuja is Mrs. Zainab Shamsuna Ahmed, the Executive Secretary of the Nigeria Extractive Industries Transparency Initiative, known as NATI. Thank you for being with us. Now, is there a sense of what President Buhari will do with the National Oil Company? Is the best solution, do you think, to split the regulatory role from the oil company?
It looks very much that the president is heeding to various advices to split up and restructure the National Oil Company. It's most likely going to be split into smaller business units that will be commercially viable, and also that the National Oil Company will be freed from its regulatory function. At this time, the National Oil Company is a policy maker. It is a regulator. It is a participant and operator in the oil and gas industry in our country, participating in the business in the upstream sector, the downstream sector, the midstream sector, as well as in the retail. That places the company in a position of significant conflict of interest, and this has to be addressed.
He's taken on the oil portfolio, yet he's also managed the ministry in the past. Why is the fight against corruption so important now? Is it because the government has very little reserves and funds to actually run the country?
The fight against corruption in Nigeria now is the single most important thing we have to do, because it has permeated every facet of our lives. And it is very, very important that it should be curtailed, and this time that impunity should be eradicated, if not completely, but almost completely. The country has low reserves, but that should not only be the reason, because corruption has spread to every aspect of the Nigerian's life. It's not about money missing, it's also about potholes in our roads and our taps being dry and very little or no light. All of it is centered around corruption. This is an area where Nigerians have collectively agreed that we must address as a nation if we are going to make any meaningful progress.
He's appointed Emmanuel Ibe-Kachikwu, previously an executive at Exxon, as the head of the oil company. Is that a good sign, do you think? After all, he is a Harvard-educated lawyer.
For me, I think it's a very good sign. It's an indication that the focus of the government now is to restructure the National Oil Company. And what better person can you use than a very experienced lawyer, a lawyer that comes with very high pedigree and also has extensive experience in the oil and gas industry in our country. I think that's a right choice that Mr. President has made.
Or do you think President Buhari will ultimately succeed in rooting out corruption? I mean, is this something that's going to take more than one term?
If anybody will succeed in rooting out corruption in our country, it is President Muhammadu Buhari. He has the experience, he has the pedigree, he has the highest level of integrity that we have seen in our country. He will succeed. Whether it will be done within the next 4 years leaves for all of us to see, but definitely it will be greatly reduced, and everybody in Nigeria will know that it is not going to be business as usual anymore, and corruption will not be acceptable. The president's body language and his words indicate that he has zero tolerance for corruption, and public servants, businesses, everybody will be held responsible.
Zainab Shamsuna Ahmed, thank you for being with us. Now, Singapore's rise from colonial backwater to one of the richest nations in the world makes it the envy of those nations that strive for the same success. As the island city-state celebrates 50 years of independence, the next 50, though, could be a greater challenge as it combats a falling birth rate and soaring property prices. The ruling People's Action Party may call for an election as early as next month in an attempt to capitalise on the celebrations. Sohail Rahman has more.
He's lived through all of Singapore's modern history. Born in 1934, Bill To owns this comic book store in a small part of the city.
Issue 1.
In his day, he was at the forefront of a changing Singapore. As an assistant superintendent of the police force, he was part of a team that saw colonial rulers leave and then fought communist ideology during the Cold War.
As a security officer, I had no doubt where we would get to where we are today, because I knew our former Prime Minister was capable of taking us to where we are.
That former Prime Minister was Lee Kuan Yew, Singapore's founding father, who retired from office and died earlier this year, but not before transforming the island nation from a small colonial beginning to one with a growing economy, flourishing tourism industry and a centre for international commerce. New shiny skyscrapers sit side by side with their predecessors. There is room for both in a country that is proud of its age, its history and achievements. Young and old are visiting museums and galleries and enjoying the shows on offer. The weather is not putting off the thousands who've decided to share the 50th anniversary of Singapore's independence.
It is looking to fulfill.
For some, like historian Jaya Ayadurani, remembering the past is a humbling experience.
The younger generation live in the first world state. They don't understand what we went through. We didn't have electricity, we didn't have safety. I came home one day being told at 8 years old that we were linked to the national grid, and it was electricity. And that's the kind of life we went through.
For many, the past cannot be forgotten. The death of Lee earlier this year and what he achieved during his tenure has led to speculation that a general election may be called in the coming months. An election that would determine the future direction that this island nation moves towards. Back at Bill's shop, he's proud of the medals he's earned for long service and dedication. He's one of many here who are eager to make sure history doesn't forget the sacrifices of so many during the Second World War and independence. So for now, they're happy to join the party.
And joining me now via Skype from Singapore, Chief Economist and Regional Director at the Economist Intelligence Unit, Simon Baptist. Thank you for being with us. Now, it's a pretty remarkable story, isn't it, how far Singapore has come in the last 50 years. Its economic growth has been spectacular, but it's the next 50 years that could shape the country. Potential problems ahead, battling a falling birth rate, and people, they're not happy with the number of foreign workers coming in. What do you think are the challenges ahead for Singapore?
Singapore has been an incredible success story over the last 50 years. I mean, the country has made one of the largest transitions in terms of GDP per capita of any country around. So it certainly can look back on its record with some pride. But it's true that the economic formulas that have worked for the last 50 years are not going to be the same ones that are going to work for the future. A big part of the drive between Singapore's recent growth has been a higher population, which of course leads to higher GDP as there's more workers in the economy. A higher population has some economic benefits, but it also imposes some cost in terms of congestion and other issues. And those have been causing an increasing amount of discontent within Singapore and causing more and more political problems. And we have seen the government from time to time stepping in to periodically tighten up restrictions on foreign workers. And so balancing some of these factors that are going to be important in order to drive economic growth along with quality of life issues are more important. Now that Singapore is a developed economy, now it clearly is a high-income country, one of the richest places in the world, quality of life issues are becoming more important. Singaporeans are now looking to their government to not just provide more jobs and higher GDP, but to provide a good life. And that's going to take the government into some uncharted waters for policy making.
And speaking of the government, it was taken aback by the loss of seats at the last election. Since then, they've made compromises, given more to poorer families, and even cut back on their own $1 million salaries as government ministers. What do you make of that?
I think that political reform is a key issue for Singapore over the next decade or so. I mean, Singapore is not a very free society. It has a lot of restrictions on election campaigning. In the last election, it was a bit of a surprise how well the opposition had done because there was not really an opportunity for that to be noticed by everybody because the election campaign is so short and there's such a lack of polling during the campaign to give an indication of where parties are travelling. Now, of course, this all serves to make life a bit easier for the incumbents. I mean, in this case, the People's Action Party, which has governed Singapore in an unbroken fashion since independence 50 years ago. Tied to that, there's also no democracy at the local level. So there's no opportunity for opposition politicians to make an impact or gain experience at the local level. Now, this, of course, feeds through into the national level because then there's no opposition politicians who are really able to effectively hold the government to account. Younger Singaporeans in particular, and the greater number of Singaporeans that are spending time in other countries around the world before moving back to Singapore, are less content with having their political voices silenced. And now that Singapore clearly is in the ranks of the developed world, and there's not worries about standards of living, issues such as political freedoms do become more important. And I think there's going to be a bit more agitation for that in Singapore moving ahead. And we do have an election coming up soon, and probably the government will call that early to capitalise on the euphoria around the 50th anniversary celebrations. Now, I expect they get the People's Action Party to win the next election, but a big question mark is how effectively will the opposition be allowed to contest them in terms of length of the campaign and also opportunities that they get in the largely state-controlled media.
Now, if we compare Singapore's story to Hong Kong, regionally, of course, its main rival has been with them. But Hong Kong has a bigger stock market, whereas currency trading, money management has been pretty strong in Singapore. But both have excelled at manufacturing and re-exporting. Is this by design, do you think, or just by accident?
I mean, both countries, of course, have a lot in common. I mean, they're small city-states on the edge of fast-expanding regions. ASEAN in the case of Singapore, China in the case of Hong Kong, and both with much more stable and business-friendly legal and business environments. So that they have similar cornerstones to their economies. And of course, they've both been big success stories over the last few decades. Both countries can clearly be held up as economic successes. Now, they are starting to have some divergence in their fortunes, and this is largely to do with the regions in which they find themselves. They do have some different strengths. Yes, Hong Kong, as you say, in equity markets, and Singapore in asset management. But Hong Kong is increasingly tied, of course, to the Chinese economy, and its future really lies in becoming a professional services centre for the mainland of China. There's a long way before Shanghai can fully compete with Hong Kong, and of course, by then, the Chinese economy will be so much larger. There's going to be room for more than one centre of professional services servicing the amount of business that will be going on in China. So that's Hong Kong's increasing role, less of a global entrepot and more as a professional services centre for China. Because Singapore is much more still playing that role as a trade hub and as a place for goods to pass through and as a base for multinational firms to explore the surrounding region. Singapore is tied to ASEAN, which is going to be a fast-growing region. However, it does also have a lot of hiccups. A lot of political and structural issues, and we see growth being quite slow in places like Thailand and Indonesia at the moment, are largely due to political and policy issues rather than economic ones. So the ASEAN region is quite a challenging one, but it does have a good medium-term outlook, and of course Singapore is in prime position to benefit from that.
Simon Baptist in Singapore, thank you. And you can see a longer version of that interview on our website. You can find that at aljazeera.com/CTC. You'll also find other individual reports, links, and entire episodes for you to catch up on. That's it for this edition of Counting the Cost. I'm Hazem Seeker from the whole team. Thanks for joining us. The news on Al Jazeera is next.